Tell me you took the gold trade without telling me you took the gold trade. On Sunday, on the weekly Forex Outlook and Reviews, I said if price breaks to the low, we should see some more movement to the downside. And that's exactly what's happened. 510 pips movement, if not even more now. And I was able to take advantage of that move and bank myself well over 1,000 pips. Is that even possible? Well, stick around so I can share that with you. So gold drops to the downside as anticipated. The big question is, was you able to take advantage of that move? If you did, let me know in the comments below, because I'd really love to hear if you were able to take advantage of that move. So the big question is, what really happened? Was this an expected move? And is the dollar getting stronger? Is there potentially a chance to see the market continuing to push bearish and see some new form downtrends? Gold prices fell more than 2% on Monday as the dollar jumped after Federal Reserve Chair Jerome Powell was nominated for a second term, driving expectations that the central bank may stay the course on tapering economic support. So Biden nominates Powell, gold drops 2%. And the expectations are that the central bank may stay the course on tapering economic support. Now, this sounds all well and good, but what does this mean for the future of gold? Tapering typically lifts the dollar as it means a step toward tighter monetary policy. It also means the Fed will be buying fewer debt assets, which suggests there will be fewer dollars in circulation. So now, in English, interest rates have an inverse relationship with gold, and typically gold price drops when rates rise. Since rates are further directly related to the strength of an economy, gold price shares a negative relation with a falling economy, as we have seen in the COVID crisis. In a report published Friday, Suki Cooper, precious metals analyst at Standard Chartered Bank, said that she sees higher prices for gold through the first quarter of 2022 as the market continues to focus on rising inflation pressures and lower real bond yields. So with that big 510 pip move to the downside over the last 2 days, does that mean we're going to start to see a decline in gold? Are investors going to start selling off their gold and putting their money in the dollar? Well, I'm not quite sure that's going to happen right now. The outlook still looks pretty bullish, and I think this is just an opportunity for investors to see price come back to some sort of support areas where they can buy back into gold at a better price before seeing the market continue up. Now, what's the point in me telling you this? Well, the truth of the matter is, I personally don't care. I'm not sure if you do. I'm not really a fundamentalist, as you want to call it, but I will tell you something. Anything that they're doing, I'm going to do the opposite. And that's exactly what I did. And I'm going to share that with you today. So on Sunday, on the weekly Forex Outlook and Reviews, I mentioned that if price starts to break the structural lower support where it's been holding for a long, very period of time, then there's a very high chance we're going to see the market continue bearish. Even if it's just for a short period of time, the bias is that if the behavior shifts to bearish after failing to make new highs, then the likelihood is we're going to see it pull back to some sort of retest level or support level. And this is what I said. Final pair we'll take a look at is gold here. You can clearly see that price has been consolidating for a period of time since the 10th of November. We have seen a bearish close on Friday, and what I would really like to see now is a break of 1844. Once we get that break close below, potential retest, looking for price to come back to an area where price consolidated previously. There was neither a bias of bulls or bears, and then we had this rally to the upside. So I know this is going to be an area of reaction, and what I'd like to see is that strong close, the patterns that resemble my trading plan or that I'm familiar with, to then confidently take sales back to around 1827. So there you have it. You can see the analysis. So what happened? Well, yesterday price started to break the structural low. 4H candle started to close bearish below that level. And the idea was that once that candle closed bearish, the behavior will continue with that consensus across the market, and we see a continued move down. Now, granted, the fundamental news regarding Powell helped the movement to the downside for that period of time, but ultimately the technical analysis led first, the fundamentals came second, and you will usually find that happens often in the markets. So what happened today? Well, I managed to get myself into gold sells. I opened 15 positions, beautifully stacking them at very, very specific areas in the market. and I was able to bank well over 1,000 pips. Now, my top mover today was 150 pips, and I'll share that with you shortly. But the idea was off of the back of yesterday's movement that there'll be a continuation, especially if you look at the daily close. So I took the trades this morning when I woke up, got myself into a position, waited patiently for price to come back to a key level of resistance where I was happy to take the sells and place a stop loss high enough so that I felt confident enough that if price breaks it, then there's a high chance I'm going to be on the wrong side of the market. If it respects it, then all well and good. What happened? Took the trades, came into the office this morning, got ourselves ready for the live trading session. And once we got that kick started, I went off to the gym. And of course, the mentors took the session. Whilst I was at the gym, because I don't have MT4 on my phone, I decided that I'm not going to look. I'm just going to hold the trade, see what happens. Remember, I've got 15 positions stacked at this time. And, it eats away at you. And eventually I had to look. Jumped on TradingView, saw that price had been pushing really strong. And I had to run back to the office. And when I got back here, this is what happened.
Rox just ran into the office saying he's in a huge gold sales. Like the world is on fire. I saw something happened. We have to evacuate the building or something. He just ran into his office. Oh, I'm in a huge gold sales. Well done, Rox. Well done. That's amazing. We want to see your trade. So whenever you're ready, share with us. He's still screaming. Can you hear him?
Yeah. So as you can see, I was out of breath. I was super excited. And, well, wouldn't you be if you got yourself into a gold trade? Let me share it with you now. So traders, this is the gold trade that I took this morning. I will break it down further when we jump on TradingView here. But you can see the multiple positions here to the left, 15 positions in total. My top position managed to bank me 150 pips, and then you can only imagine what the rest banked. This was on gold on the 1 minute time frame. And this is the trade. So what happened this morning is I identified an area of resistance in and around here. And price started to consolidate when I was looking at the charts this morning, which was this area here. And I just knew that this was the worst place to be selling this, because even though it looks like it's not making new highs, price could continue down. It's probably best that I wait for price to pull back to a key level. And that's probably the reason why, I find myself getting consistent results, because I wait for price to come back to major key levels, and something that I cannot urge you to do enough, wait for price to get back to key levels. So what I was looking at is the consolidation area more than anything. I know this is where price has previously stalled at. There is neither a bias of bullish or bearish sentiment in the market. And what I'm waiting for is for the market to shift. Once I get that shift, then I know there's more sellers sitting here than there are buyers. Once price came back in and around this area, I just waited patiently for the bullish sentiment to deplete, which you can see here. Let me use an arrow. The bullish sentiment to deplete, the bearish sentiment to kick in. And then that's where I took my first trade, placing my stop loss above this level here to make sure that my stop loss was well out of the way. So the risk to reward was around 1 to 6 here. In total, 150 pips from the first position. And then you can only imagine the rest as we continue to stack this on the way down. So I'm going to go over to TradingView now and share with you the real reason why I took this trade. So as you saw from the clip there, the idea was once price broke 1844, we closed below, then there was a very high chance we'll come back to some of these levels here, which is a previous consolidation area where we anticipated potentially buyers to be sitting before we found a reaction. Now, once that candle closed, we had this strong move to the downside, and this move was, I think, around 400 pips, if I'm correct. No, sorry, it's 510 pips. So this one was actually 290 pips, say 300. And then the rest of the move here, as you can see, 530 in total. So look, once price broke this level and we closed below, there's the bearish sentiment. We're failing to break new highs. We've broken the brick wall here. We've taken out the previous structural low. We have bearish behavior in the market, anticipating a continuation of that. And we had that movement. Now, I come into the markets on Tuesday. I'm looking at what's happening here. When I can see we have a slight pullback. Now, I'm not looking to sell the markets. Of course, the rule of thumb is to wait for price to come back to a key level for a retest and continuation. But the way I trade is based on intraday behavior and price action. And I'm not going to go into too much about that, but I will tell you now you can see that we had a nice bearish close in line with the behavior of the market. Now, if we take a look at the daily, which I don't use often, but if you look at the daily here, you can see the previous day closed bearish, and the new candle open at the time of selling, which is this green line here, was currently bullish. Now, what I'm anticipating is, of course, if the daily is going to continue bearish off the back of the previous day's behavior, we have to create the wick first. But for me to get any sort of evidence and confirmation that I need to take this trade, I'm going to need to see a bearish candle close in the direction of where I anticipate that daily candle to go. Now, this I'm using daily as an illustration, not that I use it, because I just know this in the back of my mind without having to use it. But that was a candle that I needed. Once this candle closed bearish, I now know that I'm going to have the London session in my favor, which is, of course, going to bring volume into the markets. And the idea here now is to find a tradable opportunity and look for areas to trade it. The idea of taking this trade was in anticipation of price breaking below the previous candle to make a new low, which is anything below the previous wick here and or body. And as long as the price breaks below this body after creating the top wick, then anticipate the new lower low, which means that we have a new structural low, lower high, lower low. So that's the rough idea. Once I have that information, I then scaled down to the 1 minute time frame on this occasion. And what I'm looking for here on this trade is I'm looking for an area in the market where I can enter and get a good enough entry so that I can take advantage of the bigger move to the downside if and when it will happen. So the area that I'm looking at here, of course, is this consolidation area, as I shared with you on the MT4 shot there. And what I'm looking for price to do at the time, where you could have considered sells, but it's probably best to wait for price to come back to the key level, was once this bullish sentiment depleted and this bearish candle closed. And then this is where I took the trade. I took the trade with, I think, around 23 pip stop loss here, using the previous structure to the left, making sure my stop loss was in a safe place. And then I finally closed the trade down here, which was around or just over 6R in profit. And this was the exact trade in itself. Now, I'm not going to go into detail regarding the stacking the positions here. I don't advise it if you're new to trading. Personally, just focus on taking one high probability trade each time. And of course, you know, as you become more experienced, feel free to stack. For me personally, I've had a phenomenal November. I've also had a very phenomenal year. And I decided that I wanted to jump into a few more positions calculatively, trying to get involved in the pullbacks, creating the lower highs as part of the new downtrend on the 1 minute, which is the behavior that turns bearish. Can you see that? Let me use this, which is the behavior that turns bearish. And what I'm looking to do is take the trades based on the break of the lows in anticipation of the new lower low to be formed. And that is it in its simplest form. I managed to get myself into 15 positions in total, as I said, totaling over well over 1,000 pips there. And yeah, I've done pretty well. And all I can say is I'm very grateful, being patient, identifying the structures of the markets, and just trading in accordance with my plan. So that's it, traders. You know, a nice day today. It just shows that it pays to be patient. It also shows that it pays to follow your plan. Make sure that you have one in the first place and that you're using a strategy that has a proven track record. Anyway, I hope you all were able to get into that gold trade as part of the analysis on the Sunday outlooks. If you didn't, there'll be more opportunities to come, but I do sure hope that you enjoyed this video. And if you did, give it a thumbs up, turn on notifications, subscribe if you're new to the channel. And as always, continue to trust the process.